what's up millennials? Look, I don't get excited very often, but TPGY is doing something to me, and I like it. Today we're going to talk about some updated information, and some of that new information made me want to buy a lot of the TPGY stock. So let's jump right into it. A few days ago I bought the dip in the TPGY stock, and I'm very likely going to add a little bit more later on, maybe this week or maybe in the next coming weeks. I of course notified the Discord premium members. By the way, if you want to join, you can do so by going to nasami.com/member. And I also briefly talked about TPGY in my weekly blog, which you can find on nasami.com/blog. Now, I was talking a little bit about the opportunities we see right now in the stock market and also in the SPAC market, and I believe that TPGY is definitely one of those opportunities. And I'm not the only one, because Barron's also published an article about the EV charging stocks, companies like ChargePoint, EVgo, Volta, and of course EVbox. And of these four stocks, Barron's likes EVbox best. Mainly because of the valuation, because they say it's the least expensive of the group. But they also mentioned that EVs are more popular here in the European Union compared to the United States. So that's of course also a positive sign. And they also state, well, if you look at the value, the total market cap, the total market value of the EV charging stocks, it is about $15 billion, which is actually a tiny fraction of the near $1 trillion market of all the EV maker stocks combined. So they say that there should be plenty of business and profits for the EV charging market. Because yes, I do believe that TPGY's valuation is still pretty good, especially if you compare it to the other companies and companies like ChargePoint, of course. If we look here in the investor presentation, we can see that there are going to be 140 million shares outstanding. And if you multiply that by the current price per share of about $15, then you're going to arrive at a pro forma market cap of $2 billion. If you look at ChargePoint, however, the current market cap of ChargePoint is almost $6 billion, so 3 times as expensive. And you might also remember this video that I did about the valuation of TPGY back in December 2020, a while ago right now, when I said that the fair value of this company was between $24 more or less and $52. And a little bit later on in February 2021, of course, I did a comparison video where I compared ChargePoint versus EVbox and EVgo. And I looked at a lot of things. I looked at revenue, EBITDA, valuations, number of charging stations, years of experience of the company, numbers of employees, numbers of job openings, years of experience of the CEOs, and the conclusion in general was that EVbox was the better company. Now, I got pretty good feedback on this video, so if you haven't seen this video just yet, definitely check it out. So what I want to present you with is a few updates of the updated investor presentation that was launched in March 2021. Thanks to Jerry, by the way, who sent me an email with the link to this updated presentation. The last one was in December last year in 2020, and this one is of March of 2021. And today I'm just going to talk to you about the biggest changes between these investor presentations. First of all, we can see that the SEC is reviewing the process of this SPAC going public, and they expect to close the business merger in June of this year. Let's now also take a look at the number of charging stations they have delivered so far. As of February 2021, we can see that they delivered 235,000 charging stations, which is actually the most of any EV charging company. If we go back to the presentation of December, we can see that as of October 2020, they had delivered 190,000 back then. So that means that in 4 months' time, from October 2020 to February 2021, they delivered 45,000 more charging stations. Annualized, if you take that into account, if 45,000 is in 4 months, then 45 times 3, this would be in 12 months, right? So 135,000 charging stations per year, which is actually more than what they shipped last year. Because if you look at these data, for example, over here, we can see that the difference between 2019 and the difference between 2020 is about 100,000 charging stations. If they are going to do 135,000, then they would, of course, have an increase of 35% in the amount of charging stations delivered. In my opinion, this is probably even still on the low end, because we only get started right now. We have done 45,000, but it's likely going to accelerate. It's going to go higher and higher over time. Another interesting update is the expansion in Germany right now, because on this slide we can see the amount of ports delivered per country. And if you look at the differences between the old investor presentation and the new one, the highest percentage change was in Germany. If we go back to the old investor presentation, we can see that it is a little bit difficult to see probably, but here is the number 40,000 charging stations delivered in October in 2020, of course. If you go to the new one, we can see 67,000 deliveries in February 2021. So the difference between that 40,000 and 67,000 is of course 27,000, and that is an increase of more than 67% only in Germany. That is pretty insane. And also keep in mind that we had a total amount of additional ports shipped in these 4 years between October and February of 45,000. If Germany is 27,000 alone, then more than half of the total amount of additional ports is shipped to Germany. So they are definitely expanding in Germany right now. And then comes slide number 14, because this may be definitely the most important one. I don't get excited very often, but with slide 14, woof, I definitely felt something tingling, I'm not gonna lie. On this slide, we can see that Europe is now the largest and fastest growing EV market in the world. If we look at the image on the left-hand side, we can see the amount of EV sales going on in Europe, China, and the USA. We can see that there are 1.4 million EVs sold in Europe, which is more than China and also more than the US. And if you look at the annual growth, it is quite insane. There is a difference between 2018, which is the left bar, so the dark blue bar, and 2020, the light blue bar, so the right bar, the third bar of Europe, China, and the USA. And if you look at Europe, the change between 2018 and 2020 is 240% increase. If you look at China, it's an increase of 15%, and the USA is actually down 9% between 2018 and 2020. But wait for it, there's more, because if you look at the image on the right hand side, you can see the image of the EV market share, which is right now defined as the EV sales as a percentage of the total amount of car sales in 2020, 2019, and 2018. If you look at USA, for example, first, we can see a quite steady line of 2% in all those 3 years. If you look at China, it has gone from 4 to 5 to 6%. And then in Europe, it has gone from 2% to 3% to 10% in the year 2020. So it has more than tripled between 2019 and 2020. But how does that exactly translate into the revenue of EVbox? Well, let's take a look at this slide over here, which was actually the same slide as the old investor presentation. We can see that in 2021, they expect to have 120 million euros in revenue. So 120 million, let's first make that dollars, of course. So let's multiply that by 1.2, because that's more or less the exchange rate right now. So they are going to have about $144 million in revenue in 2021. If you take into account that the current market cap is about $2 billion, and if you then divide it by 144, so $144 million in revenue, you're going to arrive at a price to sales ratio of about 14. Okay, so keep that in mind, 14. If you take into account that ChargePoint has a market cap of $6 billion, and if you take into account they expect to have about $200 million in revenue this year, so that gives you a price to sales ratio of 30. So that means that based on the price to sales ratio, TPGY or EVbox is twice as cheap, or even 3 times as cheap if you only look at the market cap of these companies. Plus, in my opinion, EVbox is the better company to invest in. So what am I going to do? Well, I love the company, I love the sector, I love the valuation, especially compared to ChargePoint, and as a wise man once said, I love the stock. I'm definitely going to add more to my position and make this my biggest position for now. And of course, I'm going to update my Discord premium members. By the way, if you want to join, then please check out nesami.com/member. Now, I'd also like to hear from you. Do you like the stock? Do you like the valuation? Let me know in the comments. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye-bye.